Welcome back. The market is going strong. We're up 230 points in the Nifty, again of 1.3%. But one stock which is underperforming today relatively is Bharti Airtel. So that's up just about 0.4%. In fact, the early rate, the first rate on Bharti Airtel was actually in the red. Now, we're just taking forward what Jio announced yesterday at the AGM. Well, the one thing that stands out is the capital commitment of Reliance Jio. Now, yesterday, Mukesh Ambani threw a big number. They said we will be investing 2 lakh crore in the 5G business for rollout. This probably includes the 88,000 crore that they've already spent on the spectrum auctions, which means you're left with a balance of 1.1 lakh crore for a pan-India rollout, as well as all the overhaul that you need on the infrastructure front. So remember this figure of 2 lakh crore that Reliance Jio will be investing. Now juxtapose that with what Bharti Airtel's implied capital commitment would be. Now Bharti Airtel spent about 44,000 crore in the auctions. And in the Q1 conference call, they said that the 5G related capex will be similar in the next 3 years to what we have done so far. That would give us a figure of about 60,000 crore. So you add up the 44,000 crore that Bharti has spent on the auctions plus the 60,000 crore that the company believes will be their capex going ahead for the next 3 years, we arrive at a figure of about 1.05 lakh crore, which is nearly half of that of Reliance Jio. So the understanding right now in the market is that there cannot be such a big gap between Reliance Jio's capital commitment and what Bharti's capital commitment is implied, going by what the management had to say. So there is a possibility that Bharti's capex will need to be upped going forward, and especially if they do invest in that expensive 700 megahertz, then of course their overall capital outlay is going to be a lot higher. So that's the point number one, that as of now, Reliance Jio's 5G capital commitment is more than that of Bharti Airtel, and significantly. Secondly, Reliance Jio's rollout timelines are more aggressive. Now, Mukesh Ambani yesterday said that they will achieve a pan-India 5G coverage by December of 2023. Bharti Airtel in the Q1 conference call said that they hope to cover every town, every key rural area, achieve a pan-India coverage by March of 2024. So Reliance Jio's pan-India coverage push is going to be about 3 months faster than that of Bharti Airtel. So that's another point of view. And finally, I think the big worry surrounding telecom is that will the operators be able to make money off 5G? They're spending a lot of money, but globally, the precedent is that operators have not been able to get incremental ARPUs from 5G, and India historically has been a low ARPU market. People have gotten used to very low tariffs, and even whenever you see the telecom operators hike the tariffs, like we had in December, you've seen many consumers downtrade. They move to a lower pack in order to save that extra money. So India historically has just gotten used to to low tariffs. So will operators be able to hike tariffs on 5G commensurate with the kind of investment that they're making? That remains to be seen. And that, of course, is an overarching worry for the telecom operators from a market point of view. But let's take this discussion forward from the Reliance AGM and find out the implications for the oil to chemical as well as the new energy business. Jal Irani of Edelweiss Financial Services is with us. And to talk about Reliance's FMCG foray, we're joined by Shirish Pardeshi, the FMCG analyst at Centrum. Gentlemen, thank you very much for joining in. Jal, my first question to you is, Reliance has announced some big capex plans, right? 2 lakh crore or incremental 1.1 lakh crore for the 5G business. On the oil to chemical business, they've announced 75,000 crore of capex. What does all of that mean from a returns point of view, from stock in terms of their balance sheet, etc.? And when you spoke to your clients post the Reliance AGM, what is it that excited them? What were the hits and misses according to you in terms of feedback?
Okay, so on the first part, I think the capex is only going up. Clearly, there's a formal announcement of about 3.5 lakh crores, 2 lakhs in the digital business, 75,000 in new energy, and 75,000 in O2C. And especially in the new energy business, I don't think, given the size of the opportunity and given the pace at which Reliance is scaling up, and rightfully so, that actually about $10 billion is going to cut it. So in my opinion, actually the capex is going to be in fact, even larger. However, from the way we look at this capex is that Reliance is generating about a little more than 1 lakh crore of operating cash flows every year. And therefore, this is fairly manageable. Of course, at the moment, they're largely net debt neutral. And in fact, one of our pain points about a year back is that a company needs to have a little amount of debt. And being net cash positive is actually not a good thing, especially as some amount of debt actually reduces your weighted average cost of capital and in fact enhances ROE. So, so actually the larger capex, at least for the moment, is welcome. And perhaps the balance sheet could take more of that. Sorry, your second question is what are the hits and misses?
The feedback that you got
correct?
from your clients, the feedback that you got from your clients post the Reliance AGM when you went with them with the takeaways. What is it that they like? What is it that they were disappointed or made them cautious?
Sure. So I think clearly clearly the most significant opportunity where we truly believe that globally is the sunrise industry is new energy, and India especially, in my opinion, is potentially going to be the Middle East of the world in this space. So this is an area in which we were looking towards more granularity. And I think to a fair degree, we have received at least, we've received at least some degree of granularity. For example, Reliance has stated that there'd be 20 gigawatts in this space. Notably, the largest in the world, LONGi of China, is 60 gigawatts, which is completely off the graph. And 20 gigawatts would, in our opinion, put Reliance in sort of the top 5 to 10 in the world fairly quickly in this space. Also, it is the technologies which Reliance is adopting, which, I mean, the way we look at it is, this is the Tesla moment for whoever can do this right. And the acquisitions which Reliance has made, and on the back of that, the technologies they're going to adopt is going to put them right up there. So for one, while LONGi may be the largest in the world, Reliance is potentially going to be more integrated than even a LONGi, and perhaps one of the most integrated in this spectrum. And in fact, the efficiency of the solar modules, the solar cells that they're going to have is going to be top-notch comparable to a LONGi. So this sort of details and some degree of granularity gives us and timeframes that they've laid down in what I view as their most promising business is indeed actually very heartening. One sort of the other thing was a significant confirmation on their gas business, where the chairman stated, if I'm not mistaken from memory, they're on schedule to ramp up from becoming 20% of India's gas supply to 30%, which is actually very important because we believe that the gas business within a short period its EBITDA is going to be nearly as large as the entire retail business, which is now more than a dozen-year-old business, right? So that's something that the market, I think, does not appreciate or understand. What were the misses? Well, perhaps there was a lot of talk about, I wouldn't say it's really a miss, but, I think the emphasis seemed to be more on the digital business and the retail business, while actually some of the other interests, like new energy seemed to be more, which is, while there wasn't too much more incremental excitement to be announced or found on those businesses versus actually something like a new energy. So I wouldn't say it's really a miss, but perhaps, given this sequencing of things, one was looking for more exciting things on, the digital and retail business, perhaps is the way I'd look at it.
All right, gentlemen, good morning and thanks for joining us. This is Pavitra, and let me also bring Shirish into this conversation. Shirish, speaking of exciting announcements, they have said that they want to get into the FMCG space this year itself. They're looking at, daily products, high quality daily products, and they're also saying that the pricing will be quite affordable. How do you read this announcement? And, in the near to medium term, how do you look at this within the larger FMCG landscape as well?
Thank you, Pavitra, having me on the show. As you said that the intentions are very clear, and it's not that they have not tried. In fact, they have the benefit that already there are about 15,000 odd retail touch points, the Reliance Fresh and various formats which are available. On top of it, the digital is also going to be very strong. Having seen the FMCG companies, I think which comes to my mind is two things. First thing is that how the quality will be maintained, because when you are managing with a lot of suppliers, managing the quality is going to be a big challenge. And unless until you deliver the consistent quality, I think how your brand will get scaled up. FMCG is all about creating brands and supporting those brands with the advertising. While you might say that India has about 11.5 million retail touch point, and you might get maybe about 2.5 million touch point very quickly through the geo and the interface through the digital. But I think what I'm seeing that managing with the large suppliers and maintaining the quality is going to be a big challenge. On the answering second question, I think it's a good example, because there is no success model which we have seen, which is a national player in terms of private label. I think Reliance has already spelled out they want to achieve. So that's what I'm saying. The intentions are very good, but to execute that will take a little time. In the short run, when we look at the full-grown FMCG companies, I think these all companies has created brand over 35, 40 years, and consumers are used to getting those brands. The only differentiation which Reliance is talking about, affordable price. And I think in general terms, affordable is the large context. Every consumer has got its pricing in their mind, and if the consumer hits those price, and if it gets at the right price, I think there will be a fall, and there will be a fanfare for the products which is in the private label. The last point which I would try to summarize, and again I'm repeating, that there is no success model which we have seen in India. But on a flip side, when we see that there are a lot of regional and D2C brands which are penetrating and mushrooming, I think there will be some check on those brands, because if there is a scale which Reliance is talking about, definitely through their own efforts, they will be able to achieve that.
Mr. Pardeshi, Jal, we would have loved to continue this conversation a little further, got more questions, but we're completely out of time on this show. Thank you very much for joining in and sharing your insights. Stay tuned with us, folks. Halftime Report is up next.